Money is fleeing from China like there's no tomorrow. Xi Jinping has just secured his third term as president, which basically makes him emperor for life, something he made perfectly clear to the world in this clip where he unceremoniously had former President Hu Jintao dragged out of the Chinese Communist Party. And now anybody who can get their money out of China is doing exactly that before the country goes full-blown communist. Heading over to Barron's here, this is dated yesterday. Investors' misgivings about the new China are well-founded. China's twice-a-decade Communist Party Congress is over, and as expected, President Xi Jinping solidified his grip on power. Less expected, foreign investors found so little to cheer about that a wave of money rushed out of China-focused funds and equities. Investor misgivings are not misplaced. The flight of capital signals not only a serious question over prospects for China's growth, but also about the tightly prescribed role for private business and investment going forward. Life is about to become even more difficult for U.S. firms. What they're basically talking about here is this decades-old delusion that we've had in the West that China was drifting back towards capitalism and they were essentially a communist country in name only, and really they were a free market economy. Well, that is right out the window now. With Xi Jinping's ascension to near God Emperor for life, then there is essentially no such thing as a free market in China anymore. China has gone full-blown communist. Xi Jinping now has absolute power. He has loaded the ruling party with all of his loyalists, and look for him to exert more and more influence over the Chinese economy and become increasingly belligerent to overseas interests in the coming weeks and months ahead. And you can see that rather clear as day here in this chart. This is a chart of the US dollar as measured against the Chinese yuan. So as this chart rises, this is the yuan becoming less valuable against the dollar. And you can see going back over the last couple of days, we've been taking the stairs up as the dollar became stronger and stronger against the yuan. That is a sign that people were dumping the yuan, dumping their Chinese wealth, and fleeing to places like the United States and the US dollar for safety. In other words, we are seeing capital flight. This is a stampede for the exits. And of course, the Chinese government is not just going to take that laying down. So fast forward a couple of days and whoa, what just happened here? This is the Chinese government defending the yuan. Late last night, in the middle of the night, the People's Bank of China ordered Chinese state banks to start dumping US dollars and buying their own currency, the yuan, with the proceeds. And that had the effect of dropping the value of the dollar and raising the value of the yuan. So now you can add the PBOC to the long list of central banks that are intervening in currency markets, like the Bank of England, like the Swiss National Bank, the European Central Bank, and now the People's Bank of China. Right here, clear as day, central banks are defending their currency against the rising strength of the dollar. Now, you have to keep all this in mind when you look at this chart here. This is the U.S. 10-year Treasury yield going over the last couple of days, and you'll notice the Treasury yield has been ticking down all week. Now, that's possibly due to Friday's news where everybody started to think that the Fed was about to pivot, something I talked about in my live stream on Friday. But it's also possible a lot of this Chinese capital that is fleeing from the country is being parked in U.S. Treasuries. And that would have the effect of raising the price of U.S. Treasuries and thus driving the yield lower. Remember, bond yields and bond prices are inversely correlated. So a stampede of wealth out of China and into the U.S. is one possible explanation for this decline in U.S. Treasury yields that we've seen this week. Something that could reverse, because if the People's Bank of China is now defending their currency, remember, China has $900 billion worth of U.S. Treasuries that they can dump on the open market to raise dollars in order to defend the yuan. Well, that would send this chart right back up as they dump their U.S. Treasuries, driving those prices lower and sending the yields back higher. And again, this trend of the great intervention globally of all of these central banks intervening in currency and bond markets and just making a total mess of things, well, now you can add the People's Bank of China to that list. And this route is extended to Chinese stocks, of course. This is in Morningstar dated yesterday. After Party Congress, a slump in Chinese stocks continues. Hong Kong's Hang Seng Index has set a year-to-date low, while U.S.-listed ADRs suffer even more. ADR stands for American Depository Receipt. That's when American companies buy these bank certificates that represent a share of ownership of a Chinese company. It's kind of like a coupon that entitles you to a share of stock over in China. Well, when people saw the news about Xi Jinping and they saw those images of Hu Jintao being dragged out of the Communist Party Congress, they started dumping those Chinese stocks as fast as they could. Following the close of the National Congress of the Chinese Communist Party over the past weekend, Hong Kong's benchmark Hang Seng Index closed down, ending the past two trading sessions at a level not seen in 13 years. Monday's single-day slump of over 6% was also the worst sell-off since the 2008 global financial crisis. Overnight in the U.S., Chinese ADRs tracked by the S&P China ADR Index dipped 13.7%. And you can see that in this chart. This is looking at the Hang Seng Index, and look at that big drop down at the open on Monday. Investors did not like what they saw at the Chinese Communist Party Congress, and a large chunk of them decided to just dump their Chinese stocks. Which brings me over to this article I saw in Zero Hedge, just dated this morning. Wealthy Chinese activate financial escape plans, terrified of Xi's coming reign of terror, and why this is good news for Bitcoin. And long story short, if you are looking to move large amounts of wealth across invisible lines in an undetected manner, Bitcoin is actually the easiest way to do that. You can carry virtually unlimited wealth on something as small as a flash drive, and you don't even need that flash drive realistically. All you have to do is memorize your recovery phrase, and you can move basically as much money as you want anywhere in the world, which is one of the reasons why China has cracked down on cryptocurrency trading in recent years, to try to stem the tide of capital flight out of the country. And well, so much for that ban, because Bitcoin has just taken the stairs up all week here, up over a couple of grand this week, ever since that video of Hu Jintao being dragged out of the Congress started circulating online. Now, there's one thing I want to point out, is that all of these things that are happening over in China will have no effect on this chart, the DXY, otherwise known as the Dixie, or the US dollar index. There are actually no direct results of what happens in the world's second largest economy, China, on this index. Why? Well, I'm glad you asked. What you're looking at here is the weighting of all the currencies that make up the Dixie index. The euro, the Japanese yen, the pound, the Canadian dollar, the krona, the franc. Noticeably absent from this list is the Chinese yuan. Believe it or not, the currency that is used in the world's second largest economy is not included in the US dollar index. It has no direct effect on the US dollar. Now, there are certainly knock-on effects. China's our biggest trading partner. They're a big trading partner with Japan. So what happens in China will eventually affect the DXY, but it is a fact that the Chinese yuan has no direct input into the US dollar index. So long story short, folks, anybody who can get their money out of China right now is doing so, because there are not good things on the horizon coming out of that country. A radical communist has just basically been declared ruler for life. He has absolute power, and he has made perfectly clear that shared prosperity, i.e. government seizing control of everything, is his priority. And people are justifiably worried about that, because seizing of private property is kind of the hallmark of communism. Something that's given rise to terms like runology, otherwise known as the art or science of getting your butt out of China with your wealth intact. As the housing market collapses, as the war drums are being beaten, as escalating tensions with the U.S. and Taiwan, zero COVID policies, lockdowns, you name it, people have any number of reasons to get out of China right now, so much so that there is a new phrase, runology, the art of escaping China. So in the short and medium term, folks, be very wary of any companies that have a large exposure to China, as we don't know what Xi Jinping is going to be doing over these next few weeks with all of this new power that he's amassed. But it's probably not going to be good for American interests within China. Companies like Apple, Nike, and Caterpillar come to mind. Those companies get a lot of their sales from mainland China. And meanwhile, look for further interventions from the People's Bank of China in currency markets as they defend their yuan from the plunging value being caused by people getting their money out of China. And you can add the PBOC to the long list of central banks that are making a mess in global markets, something I talked about in this video about how Japan has just absolutely destroyed their own bond market. Until next time, live small and dream big.